a partnership between tax talent and FEI. And we're incredibly excited about the first of this three-part series, as we know that in today's complex environment, the tax function has moved to a center stage, and it's really in a more strategic position to both maximize shareholder value and mitigating risk. So today's focus is going to be on maximizing communications on a number of fronts in order to be successful in accomplishing those goals. Now, we know that there are three main components for tax function performance and really performing at an optimal level. Today, we're going to focus on communication. And for the next two presentations, we're going to focus on business alignment and then department optimization. But for that third presentation, we're also looking for your feedback. So we're going to get to that a little bit later on. So let's go ahead and focus on the key areas of today, which are communication. So these are the points that we're going to be focusing on. And our presenters today are going to be essentially answering questions associated with each of these best practices of communication within and across tax departments and different functions associated with those tax departments. Now, the participants today, we have Tony Santiago, who is the founder and president of Tax Search Inc. and Tax Talent, myself operating as the presenter of today, and our special guests are John Briscoe, Senior VP and CFO with over 30 years of experience in finance and audit, alongside James Parent, who's the VP of Tax with over 20 years of experience in tax. So between Tony, Jim, and John, they're going to be really participating in a Q&A session to highlight these key drivers of performance with regards to communication to optimize your tax department. So on that note, I'm going to go ahead and pass it off to Tony to get started today. So Tony, thanks so much for joining us.
Oh, it's my pleasure. Thank you, Marcille. I'm looking forward to the discussion today. I think most of us who are attending this realize that the tax function has been pushed to the forefront more so by some of the events and regulatory issues that are occurring, pressures out there to mitigate the risk and maximize shareholder value. I've never seen it like this in the 34 years I've been in the staffing recruiting business dedicated to tax. With that in mind, it's something I always try to look at as to what are the common denominators of the departments that tend to outperform others in tax. And through the decades, I think communications has come back to me as being one of the cornerstones. And it's why we've chosen this topic for the webinar, for the lead-in. And today we're going to spend some time with both John and Jim asking some questions around the communications area that I think will shed some light on how tax departments and financial leadership teams can work together better to achieve optimizing their communication processes and systems. With that in mind, the first question I'm going to address will be to Jim as a Chief Tax Officer. And what are the best communication practices, Jim, as far as building the tax team itself internally and breaking down the barriers between each of the subsets of tax, such as planning, compliance, audit, and reporting?
I guess, thanks, Tony. And my comments are just going to come from the experience I've had both in my current position and my last position, which were large multinationals. And for the most part, we had to build the teams up from a small number to a very large number. And the one thing that was always very clear to me from a communication perspective in tax is each of the teams, whether it's tax planning, tax accounting, tax audits, tax compliance, it's critical that they're talking to each other because issues in tax are complicated. They can be dealt with, but you need to have clear communication across all of those areas. And so I think you start with trying to set the right tone at the top and trying to instill an environment where people understand and the teams understand that talking with each other is really critical and it's critical to success. You sometimes won't get as much communication as you would like, meaning you may think it's happening, but you sometimes have to pull it out of people. You start with, at least from my perspective, when I hired the group of people I have in my current role, I told everyone three things when we started, which was critical to success. And one of them was teamwork, One of them was talking and interacting with others, because it's the foundational element to communication. You got to be able to have teaming and to be successful. So I think, Tony, you would kind of start with tone at the top, and just constant communication, constant dialogue. The other thing we would try and do is have weekly meetings where you'd bring all the teams together. I have one where it's kind of the leadership team in tax comes together, talks about the issues that are ongoing, and another one which is a coordination meeting, which is trying to bring all the tax projects together across the different groups at a little bit lower of a level. So I think it's tone at the top and constant communication, and trying to have meetings where you bring everyone together that helps in this area.
Jim, are there certain groups within the tax function that maybe that can have more difficulty opening up the lines of communication with between the groups? I know the old stereotypes between the planners and how they view the reporting group and how the compliance team is viewed in audit. There's always those kind of finger pointing sometimes going on between the groups of which ones don't talk to each other effectively. What's been your experiences about that, and how have you been able to break that down effectively?
I don't know that a particular group has an issue. I would almost view it more as certain individuals will have biases, which are to not be as communicative. So, I mean, what I would say is it's just constant communication. One thing that we did, both actually in my last position as well as this one, is we put the entire team through a Myers-Briggs assessment. And it was pretty helpful because it showed everyone what their traits were as an individual, introvert, extrovert, as well as helped other people see and understand, what their colleagues were like, kind of what their traits were like. And once you understand their traits, it does help from a communication perspective, because you realize you may have to deal with them in a little bit of a different manner. But I don't think communication is a group in tax, planning, or accounting, et cetera. I think it's more, it's individualistic that you got to work with.
And your assessment, the Myers-Briggs project that you've taken on, how effective has it been in lowering the barriers between individuals as they understand each other's styles a little differently and how they respond?
I think it was exceptionally helpful. I mean, it doesn't, from first moment in time, it doesn't necessarily change who you are, but it helps indicate your preferences. It helps other people see your preferences. And quite frankly, a week ago, someone said to me, well, Jim, we're a lot alike. We were in the same quartile or the same box as part of the assessment. So it does help people relate to each other.
Next question I'd like to go to would be for John Briscoe, and this is now shifting from the internal tax department communication and how you can open it up that Jim did a very good job of articulating, to asking a couple of questions to both John and Jim in relationship to communication best practices between the tax leadership and the financial leadership. And of course, John, being our representative CFO, this will be a good time to get a question related to this to him. In your experiences, John, what has been the most frustrating part of attempting to communicate with the tax departments you've led and oversaw?
Well, and thanks, Tony. When I think about it, I wouldn't use the word, frustrating probably, but for me, what clearly doesn't work is for tax to be a black box where the rest of the organization doesn't understand, doesn't know what's going on in tax until they see the end result. Clearly there are confidentiality and privilege issues that need to be considered, but from my view, the tax strategies and tax planning activities must be communicated within the dependent functions and also with operations. These groups need to be included in the strategy, the planning, and the development stage, not after tax is decided on what the strategy, plan, or go forward action items are going to be. And really emphasize early participation and communication, because this will actually reduce the execution risk of a particular strategy. And then I think you'll find that it will save time during the implementation when you may have identified potential roadblocks or speed bumps early in the process. It's also important that there's good communication within the tax function, and it may be obvious, but I've seen it before where sometimes tax will operate within operate as separate silos within itself and not have good communication back and forth within the tax department. And I also believe, and I feel pretty strong about this, that tax has an obligation to provide baseline training and communication, in particular to the operations group. This should include, I'll call it non-accountant type training on legal structures, on the impact of different tax regimes, and examples of how good tax planning has a positive impact on overall cash flow. And from my experience, this type of training really helps to open up two-way communications with operations so that tax is included in operations planning at the early stages. And that's important whether you're talking about a new contract, a new manufacturing facility, operations in a new jurisdiction, or discussion regarding operational growth or maybe operational contraction that may affect particular tax attributes. And tax really needs to be proactive here because, while the Treasury and accounting functions may be more comfortable talking about tax and engaging in these type of discussions, some of the operations individuals are, to be frank, intimidated by tax, or, from my view, mistakenly believe that they don't have a role to play regarding tax.
And I think John, his passion for explaining some of these other issues leads into some of the other things we're going to go into in a minute, which is breaking down communications between the cross-functional groups, the advisors, but also operations, which is kind of our last group we're going to touch here. And I think John knows how important it is. So he's given us a little bit of a preview of that, and we're going to go into a little more detail in a minute. When it comes to, John, the communication between yourself and the tax leaders that you've managed directly through the years, have you had a few examples of things that have worked exceedingly well and what those individuals did to facilitate that communication and performance from the tax department?
Well, my first, I guess, point of advice to when you're communicating when tax is communicating with the financial leaders is, first one is, know your audience. What is the tax technical knowledge of the financial leader that you're communicating with? The conversation with a CFO who came up through tax will be very different than the conversation with a CFO that just came out of investment banking or operations. So, keep the conversation high level, limit the acronyms as well. It's real easy to make things more complicated than they are when you start throwing in terms that the financial leaders may not be familiar with. And sometimes things really are complicated, but start that conversation by framing the issues and the outcomes in terms that don't quote code sections and FASB terminology, and then dive into the next level of detail, when asked and when you really have an understanding of your audience and their knowledge of some of the tax areas.
John, one of the things I've gotten from some of my clients as I've been asked to come in and sometimes upgrade or replace an individual that's been running a tax function is the emphasis on no surprises, that there were too many surprises, too many things were not brought up in a timely manner. Is that something that really sticks in the craw of financial leaders? Well,
I don't think there's a CFO out there that likes being surprised, with numbers. And so, it's really important that you have a lot of communication, and I think Jim has touched on this a little bit, but that you have, regular communication. He talked about having regular staff meetings within his team, but that the tax leader has regular communication with the CFO, that he initiates some of that. If there's a new issue that's come up, if there's a new project or a new wrinkle that is developed, that the tax leader is proactive. But I think the CFO also has some responsibility, to reach out and maintain a level of contact and understanding and open dialogue and communication with the tax department as well.
Jim, I want to direct this question towards you without making it sound like you're complaining about financial leaders, but just in your experiences, have you had many frustrating experiences in trying to bridge the gap in communication with the financial leaders you've had to report to?
I think John touched upon some of the qualities that are important in the CTO to understand when communicating to the chief financial officer, the chief accounting officer, or others in finance. I think if you take those qualities and those characteristics to heart and you pay attention to them, understanding the tax aptitude of the CFO, what's his background, it limits the frustrations that you'll have in delivering the messages that you need to deliver. I always try very, very hard to, when I'm talking to my boss, who's the chief financial officer, to ensure that I don't use code sections, to ensure that I don't try and get into the nuances of the tax law, but I try and keep it at a very, very high level and something that's easy to understand from a business point of view, and more importantly, how it in fact affects the business. So I think, Tony, the frustrations that I've experienced have been relatively minor when you keep kind of those thoughts in mind, which is you're not talking to someone in tax, so bring it to a level that someone in, from a finance perspective with a general business background can understand. It doesn't mean they don't understand tax. It doesn't mean they're not smart to understand tax. It just means they've got a broader view and try and speak to the broader view, or the broader understanding. When there is frustration, it's usually when my objective and the objective of finance may not be fully aligned, in which case you got to just try and very carefully bridge the expectations of what I'm trying to achieve and maybe how it cuts against finance to make it compatible in some manner to move it forward.
John, one last, if you were going to give just the short and sweet, concise advice to a CTO that cornered you for 5 minutes and said, I'm really having struggling time getting through to my financial leaders, what would be the top 2 or 3 things you just would say, these things are the 80-20, the 20% that will produce 80% of the results for you in achieving that?
Well, I would say regular communication. And that could be just, some real quick notes that you send across to the CFO so that, one, he's not surprised, but also, if the, CEO corners him in the hall or something, that he's up to date, he's up to speed on some of the things that are going on. Those don't have to be long notes. If you're having regular communication, doing it frequently, and little sound bites can be sufficient, and then that will serve as a reminder or a tickler for the CFO if there's something he needs to drill down on, that he'll set up some time and drill down on it that way. Keep it simple. Jim talked about this, but present things. Sometimes tax, you can't always talk about the strategic side of it, but whenever you can, talk about how it's going to tie into the longer-term strategy, either in a particular region or with a particular product line that you're focused on. It may be tactical, and so you may have to talk about the tactics in a particular jurisdiction that you're dealing with. But don't jump into the complicated side of it. Keep it high level, make it frequent, and I think that's really going to be a key to success for you.
I think, Tony, just to to add to John's point, I have, for my last 2 CFOs, sent each week somewhere between 3 and 7 emails. And those emails, they're no longer than 4 sentences. The goal is only to have them 2 sentences. The goal is to give the CFO what he needs to do his job in the event something comes up prior to my being able to talk to him live. So if there's an article that's in the Wall Street Journal, if there's something that comes over the news, if there's a new piece of legislation that came out, the email is something to the effect of the following has occurred. Here's what the impact on the business could be. Here's what the next step is, and that's it. And the expectation is that's not valid communication, meaning I don't expect my CFO to remember it. I still have to bring it up live in a meeting. But on many occasions, it's actually been very helpful because the CFO will get it, and 3 hours later, the CEO will be asking a question, and they don't get caught off guard. And it quite frankly has helped really well with communications between the tax function and finance.
Yeah, and Jim, that's a great point, because I've even had board members call me up after they read an article in the Wall Street Journal, and having just a couple of sound bites is all that you need to move on with that conversation with the board member.
No, that was excellent, gentlemen, and I think we could spend another hour on that topic alone between communication between this financial and tax leaders, but due to time constraints, we need to move on, and we're going to shift now to communication strategies with corporate cross-functional groups. So, this obviously lends itself to questions to both John and Jim, but I'll start with John first. How important has it been to have a strong and positive communication system with the cross-functional groups? And what can the CFO or financial leadership team do to facilitate and promote this as well?
Well, I think it's incredibly important to have open communications across the finance functions with tax. And, I really think that, clearly the CFO sets the tone within the finance organization, but you really need to make sure the communication is working well at the CTO, Chief Tax Officer, Chief Accounting Officer, and Treasurer level. But then there also needs to be regular dialogue at the director and manager levels as well in the organization, forming cross-department, project teams is a real good approach as well, because they'll meet regularly on, significant planning items, and so that will help create that dialogue and really relationship across the departments. But also, the Treasury and accounting side of the shop also need to engage with tax early in their initiatives as well. This isn't just a one-way street. If Treasury has a new project, that's going to affect global Treasury operations, tax needs to be brought into that early as well. And, simple things that are sometimes overlooked, like team building exercises, can also help break down the walls. But you don't want to forget about the field finance organization as well, and just focus on the corporate side of it. So make sure that the communication is happening with the field organization, and that you have, regular dialogue between the regions and the countries as part of the finance organization as well. And you just may not realize the inefficiency that is created when the good communication is not happening. From my experience, it just really slows down the productivity of the entire finance function.
Are there some specific things you would recommend for a financial leadership team to do to make what you just described actually happen?
Well, I think the first thing, and I would say this applies to just about anything from a leadership, but leading by example is, I think, the best way to achieve the kind of results that you want. get out there, reach out to tax at the senior financial leadership level, and make it clear what the expectations are, and then give everyone examples of good behavior by exhibiting good communications yourself. That will really help open up the doors. Be inclusive. Include other functions in discussions of tax issues. Even though it may seem like, gee, this is just a conversation between tax and the CFO, pull the individuals from the accounting function into some of those conversations. Pull, people from Treasury in. Be more inclusive so that you're really creating a culture of inclusion and not just letting people know, on a need-to-know basis. Town hall meetings. I've used town hall meetings in the past, and these can be local within corporate, or they can be global, where you pull in the entire finance organization. WebEx, like we're doing here, and other technologies also can be utilized either in the town hall functions or for just periodic updates.
Jim, do you have anything you want to add to the cross-functional communication from a CTO's perspective?
I find it hard to add to what John what he just articulated. I mean, I think he made some excellent points there. The only thing, I can add as an example of cross-functional communication is the one thing I do have is every 3 weeks I have a standing meeting, or we call it LINK, which is really a call with our regional controllers. And the purpose of that is have something on the calendar so that way you can talk to them about what's going on from a business perspective or from their point of view. And if something comes up in the meantime that may be difficult to deal with or a little bit contentious, at least you've got a open line of communication, set meeting, you're not calling it special, and you have a forum to bring it up. But I mean, other than kind of individual communications and individual relationships, I think John summarized it exceptionally well.
All right, we will move on to the next section for communication, that is best practices with tax department advisors and vendors. I'll start with this question to you, Jim. What do you believe to be the right balance between the vendor relationship of the tax advisors that you utilize and what's in the best interest of the shareholders?
It's an interesting question. It's probably a loaded question to some extent, and I might answer it differently than most CTOs. I've been in several situations where we were going through a global transformation of the tax function, and the tax advisory firm that was assisting us was actually a key member of the team. And so in the situations there, you end up with a little bit more than probably is appropriate, balance in the advisor's hands, because you're really relying on them to help get you through the process, and you're relying on their experience. With that being said, what is absolutely critical is that you still manage them, that they are in fact reporting to someone at the company. Because at the end of the day, the company cannot abdicate its responsibility for its tax accounting, for its tax planning positions. I mean, the company has to have responsibility. So that the first thing you can do to make sure you kind of get the right balance is make it clear that they report to someone in the company. And it could be to the CTO, it could be to a direct report of the CTO, a planning director, a tax accounting director. It could actually be someone in accounting. When I came to my last job, the accounting officer was leading many of the tax projects, working with the advisors, and he had complete accountability, and the tax advisor was reporting to him. The second important way to kind of manage the accountability with the advisor and to get the balance of power correct is with the engagement letter. They can be very painful to spend the time to kind of write them clearly, but if you do put a good engagement letter in place, which clearly indicates what you're asking the firm to do, it helps immensely if they seem to be going outside the bounds of what you've asked them to do. And oh, by the way, if you've done something that's not in accordance with the engagement letter, I'm not going to pay you. And let's not forget that tax advisors work for fees, and if they run the risk of not getting paid, they're probably going to be a little bit more conscientious of doing what you ask them to do. So, and I guess there's one other point I'd make that kind of comes to mind, which is if you're trying to manage your advisor, depending upon what the project is and what you're asking them to do, you know, I went and you know, as we were building a tax group at my last job, or my current position, we needed to have quite a few advisors kind of in-house helping us run the business day to day. And one of the things that we did was we made them work on all of our own systems. So rather than doing the work on their networks, doing the work in their software, and giving us a deliverable at the end of the day, we made them work on our systems with a framework that we established so that we had everything, you know, in our hands when the project was complete or the process was complete. It sometimes is frustrating for them because they would prefer to have it on their systems and they'll give you the copy in the end. But if you think about it, you always run the risk of not getting 100% of the material. So if you have it on your systems, you have 100%, and now you're, you know, they've got the risk. So I guess the long and short of it would be, you know, managing the advisors. It can be tricky, but you know, it's important to do it and make sure they realize that you are the client, and you know, the company has to have control over its accounting, tax accounting, and tax planning.
John, from your perspective, I've had many situations in my career where I've had a, you know, CTO call me and say, hey, they're outsourcing the tax function. I didn't know anything about it. You know, the advisors came in and pitched to above tax and did an end around, or I get the frustration call that the advisors are pitching some kind of crazy strategy that will be a nightmare to implement and execute, but they've got the ear of financial leadership. What can the financial leadership do to make sure that they don't get pulled into some of those types of scenarios and use their internal tax advisors as their primary sounding board?
Well, you know, some of this comes back to what Jim said, where it's, you know, really important that you have the right relationships, you know, with your outside advisors, so that, you know, the tax department isn't feeling like they're being bypassed. You know, clearly, you know, as the CFO, some of the outside advisors will want to have direct access to me, but where it relates to a particular tax issue or tax topic, I will insist that they work through the tax department. You know, they may have a particular idea. Hey, gee, we think this is a great idea, and I'll make sure that if the CTO isn't at the table, that, you know, the lead for that particular part of the tax function is at the table when we're having that conversation. So you'll never stop the idea, or I guess, you know, the outside advisors trying to have direct access to the top of the finance organization. And so I think it's just important that I try to keep those conversations at the right level. And, you know, you also just have to, you know, really make sure that you have, and Jim touched on this, but, you know, I really believe you can't outsource the responsibility and accountability when you're interacting and working with or with outside advisors. You know, at the end of the project, the advisors can always walk away, but we have to live with the new structure or the new reorganization that they may have proposed. So, you know, Jim said, you know, have them report to an employee. Our employees need to monitor and take a very active role in the planning process to make sure that whatever we develop is going to be what I call fit for purpose for the company. And many times I've seen some, really great and interesting ideas that maybe weren't fit for purpose, and, kind of gets back to the saying that I have of, just because you can do something doesn't always mean it's a good idea to do it. You may actually introduce more complexity than you really need.
Well, another topic we could spend a lot more time on, but we want to get some time for Q&As, and the last one of our communications is a big one. It's so big that it's really a lead into our next webinar, and that's communications strategies with business operations. And on our second webinar, we're going to talk about alignment with the business operations. So I'm going to shift now, Marcel, to communication strategies with business operations. Start with Jim as the first person we're going to Q&A on this one. Jim, can you give the audience an idea of how critical it is moving forward in the new tax environment we are for tax planning initiatives to be embedded with the business operations point of view, and how this leads in the relationship and impacts its communication with the business side? Can you expound upon that?
Sure, I can real briefly, I guess. If you work in a multinational environment, which is where I work, I mean, we have operations in over 50% of the countries that exist, and you start thinking about tax planning in today's environment where you have the OECD talking about BEPS, base erosion profit shifting, and how are you going to sustain the tax planning that's in place. It all comes down to where our operations are located, where we have people, and the key is for the future planning is how do you put your people in a location where they can make their money, in the lowest tax jurisdiction possible. So in order to do that, I mean, from a CTO's perspective, you really need to understand the business. You need to understand how it's conducted. You need to understand kind of the leaders. And all of this requires strong communication with operations, on a daily basis, and really getting behind how the organization makes money. So, my key message here would be for the future and driving into the future from a tax planning perspective, a tax department that leads from behind the desk, in an office somewhere may not be as successful as a department which is a little bit more open and communicative and trying to learn the business from the operations point of view out in the field.
This is going to be our last question just due to the time right now, so we have some time for Q&As, but it's a big question, and it's one I'm going to address to both John and Jim. It has to do around the issues of managing the issue of margin versus operating income and how that relates to dealing with the operations people who potentially are not measured by after-tax metrics, and how do you help motivate them to do the right things for shareholder value, risk mitigation, and all of that, yet still hit their localized metrics that they're measured on. And John, I'd like you to, if you would, address this from your perspective on what's the best practices from a CTO and a financial leadership on how to handle this.
Well, I think this is absolutely key to, I'll call it the success of a tax department, as well as the success of operations and the success of the two working together. And in my opinion, you should not set the incentives based on gross margin. The incentives for the field operations should not be set based on gross margins or operating income. And from my point of view, EBITDA also isn't the best metric. And these metrics can reward behavior that I consider at times to be negative or can have negative impacts to the bottom line after taxes. So you work your way down EPS and net income. While these are better, I still don't think they're the right metric. And I really strongly believe that you should set your incentive plans up so that they're based on cash flow returns on invested assets or operating cash flow. And I personally think, because I've worked with it quite a bit, that the best metric is cash flow value added, or CFVA, which is essentially the old EVA or enterprise value added metric. And I think this metric really holds the operations accountable for the cash flow that they generate compared to the company's overall cost of capital. And, you know, I've talked with people, and some people have concerns that, well, gee, this is complicated, and it's difficult to assign all of the assets to a business unit at some companies, and maybe you just can't, you know, break down some of those components into a particular business line in order to incentivize them, or a particular region in order to incentivize them. And in those circumstances, I strongly believe that you can make simplifying assumptions. It doesn't have to be a theoretically perfect calculation. You can make simplifying assumptions so that you're still driving people toward what I call the bottom line, which is cash flow, and that they're focused on making the best long-term decisions for the organization.
And Jim, I'm going to ask you to address this in just a minute or two so we have some time for the Q&As. I apologize. This is why we're doing the whole second webinar on aligning operations and tax together. So go ahead, Jim.
Yeah, sure. I guess the entire topic that John just noted and that we're talking about is complex. And I guess if there's one key takeaway, it's one size doesn't fit all. And what you really are supposed to be managing people on is kind of what they can control. And so it's a reality as a CTO, we need to deal with the fact that the people we're relying on to help us meet our objectives, which is lower the tax rate, may have different metrics. And I mean, the way I've tried to deal with that over time is just building strong relationships with the business guys, the operations guys, helping them out, you know, when they need new entities set up because they need to do a contract, or when they, you know, they need a contract reviewed and, you know, it's due in 24 hours, you know, kind of bend over backwards to try and help operations. So that way, while they may be managed on completely different metrics, maybe it's based on margin, when you're trying to get them to focus on after-tax dollars, which may hurt them from a margin perspective, they'll be a lot more inclined to help because you've built a relationship with them, and you have you know, you've bent over backwards at other points in time when you could to help them out. At the end of the day, we're all going to have different metrics. It would be nice to think everyone should be managed based on after-tax. Since that will probably never truly happen, you know, a way to help meet our objectives as CTOs is to ensure that we got good relationships with operations and try and sell them on what we're trying to achieve. Is that short enough, Tony?
That was excellent. Much better than I could have done. As I said, it's one of the areas I have a really, really strong interest in expanding into more in the next webinar. It's at the core right there with communications for success going forward. Would like now Marcel just to give us a quick brief introduction of what we're going to be doing next in the webinar, what will happen on links for people for recordings on this if they want to forward it to anybody else in their organizations, and then we'll open up for any Q&As going forward.
Right. So first of all, thank you again, Tony, Jim, and John. Fantastic information, and we're all looking forward to the next two webinars coming up here. So to Tony's point here, and before I go into the follow-up, I do just want to remind everyone, take a few moments here. If you have any questions, we are going to have a Q&A session starting here in just a moment or so. If you have any questions to address to any of our three presenters or the group as a whole, please go ahead and post those in the chat bar to your right, and you can send those directly to the host of our presentation today. Now, as Tony mentioned, as follow-up, what all of you will receive is a link to an audio recording as well as a summary of today's information. So the questions as well as the answers, both posed and answered by Tony, Jim, and John. And that'll be emailed to you via the email that you used to register for today's event. Now, we have just finished our first of this three-part series regarding new drivers for tax function performance. And on October 21st, we'll be addressing, to Tony's point, the emphasis on business alignment between operations and tax, all with the emphasis on optimizing your tax department through mitigation of risk and maximization of shareholder value. So that last question that was posed will really be the core of this next presentation. So along those lines, I'm going to go ahead and open it up to our Q&As today. Just want to remind you, if you have any questions that arise after today's presentation, or if you have a few moments to think about it later on today, please don't hesitate to reach out to Tony. His email contact information is here, and he'll be happy to answer any questions that you may have moving forward. So I'm actually going to go ahead and start with the first question. And Jim, excuse me, this question was addressed to you. This goes back to our first topic of conversation, which was about communication best practices within the tax department. And the question to you, Jim, is can you name any situations in which communication was at its best, and why do you think that was the case from the finance department's perspective communicating with tax? Any particular scenarios you can think of?
Probably the a good example or good examples is tax planning projects. The fact of the matter is you cannot implement any project without assistance from legal, the treasury group, the accounting group, and possibly even operations. And there's two ways to do planning. One is put the entire project together, dot all the I's, cross all the T's, and then bring it to everyone else and tell them this is exactly what we're going to do. If you do that, it will fail miserably, and you will not get your project implemented. The other opportunity is, or the other approach is, put an outline of it together, what you're trying to achieve, bring everyone together, walk them through it, and get their perspective. Get their concurrence that it's appropriate to move forward. Halfway through the project, while they've been consulted throughout the entire project, bring everyone back together, make sure they're still aligned, and when you get to the end of the project, it will be amazing how quickly everyone signs off, number one. Number two, how it gets implemented and is successful. So that is probably a good example of communication being very effective, and it really is just keeping everyone informed along the way.
Fantastic. And Tony or John, do you have any additions to that question?
Well, I really think what Jim has outlined is the way you keep a project from just going off the rails and ending up in the ditch. I mean, I've seen it happen before where, tax gets out in front of the rest of the organization and they, didn't realize, weren't aware of a particular issue. Maybe it was in Treasury, we needed to, move cash in order to complete a restructuring, and, the Treasury didn't have the cash available in the right places in order to complete the transaction as outlined. And so this is really important that you follow what Jim outlined there, because it's the key to success so that you don't end up having to go back to square one and just start over from the beginning.
And I think if you want to take it from the finance side, if finance is not communicating to tax what they want to achieve, don't be surprised if when you get to the end, you either A, can't do what you want to do, or B, there's a material tax implication from it, because tax, the converse of what we just talked about is, tax needs to be involved in the finance projects that are ongoing, because there are a lot of overlaps, with the tax world that will exist.
Fantastic advice. Thank you so much. I have another question, and this relates to the inter-department communication. The question is, have either of you started to warn management if the perfect storm between U.S. tax reform and BEPS start to occur within the same time frame? Is that something you've ever dealt with?
Can you repeat the last part of that question?
Of course. Have you ever communicated to management or warned them of the perfect storm if tax reform and BEPS occur within the same time frame?
That's a good one.
Well, I guess I'll start with that, which is tax reform and BEPS are two sides of the same coin to some extent, and the dialogue I've started to have is just one of we're flying through very turbulent times right now, and it's very difficult because you can't predict where BEPS will come out or where tax legislation will come out and what impact it will have on your structure. And so what I have tried to do is just lay out what are the factors that are out there between BEPS and the action items within BEPS, the potential areas of legislation that are being proposed that could impact the structure to the organization, and just make sure that they're sensitized to it. And in fact, having that communication, that becomes, in many instances, the topic of my 1 or 2 sentence or 3 sentence emails, which is just the following has occurred. And when all said and done, 2 years from now, I have no idea what the tax environment will look like, what the impact may or may not have on my existing company. But I do know that management won't be surprised that there's changes. And the other thing I constantly communicate is, look, whatever the changes are, your tax department's responsibility is to try and figure out how to minimize the impacts, try and see the impacts coming as early as possible, and trying to react to them. And so the communication that I'm delivering is, here's what's out there. I'm also delivering, here's what we're considering as potential defenses to those actions that could be taken, and then here's what it might look like. And it's very succinct, and hopefully my CFO realizes it will turn out completely different than we're talking about today, but at least we're being proactive in the process.
And I would say, and Jim touched on this a little bit, but it's important to have a plan A, a plan B, and a plan C, because things will never turn out exactly the way you envision, or what the taxing authorities may be talking about loudly on TV is not going to be what will actually be implemented. So, just make sure that you keep some alternatives in your back pocket, because you're probably going to need them.
Okay, great. Thanks so much. We have time for one additional question here, and this relates to the communication strategies with cross-corporate functions, and corporate cross functions. And the question relates to what both of you have seen to work as it relates to communicating within the tax department, and what hasn't seemed to work, specifically as we look at confidentiality and privilege issues as we look at cross-functional teams.
Well, if we're focusing on confidentiality and privilege, I guess it's a great question, and usually it's the tax planning side of the tax function that gets very concerned over confidentiality and privilege, because you really do not want to have your tax opinions widely dispersed within the department. You don't even want to have your structure widely dispersed within the department. And so there is an absolute need for discretion and confidentiality. In my department, we limit privileged material to my direct reports and my direct reports only. However, it's not limited to planning. It's all of my direct reports have access. And the reason is what we started this call with, which is, every tax planning project has tax law implications, tax accounting implications, tax compliance implications, and it's ultimately got to be defended upon audit. And it's a balancing act, and it's a really difficult call at times. But if you limit too much the information, you're going to make a mistake in one of those areas. Usually not tax planning, because they're the ones controlling it, but in tax accounting, tax compliance, you will make a mistake. So you got to be careful limiting the distribution of that material too broadly, but you have to make sure you do share it, because otherwise you can have problems. And I spoke to it from a tax department's perspective. The reality is Treasury, accounting, the right people in each of those areas need to know certain aspects of those plans, because otherwise they can't account for it, they can't fund the transaction, et cetera. So it's a balancing act, but you have to do it, and you have to do it carefully.
Right, and the external independent auditor will need access to some of that information as well. And my experience is you can always work with the independent auditor to find a balance of what information they need to be able to complete their audit work, but still not open things up too much from a privilege point of view.
Okay, we had one last question that we'll run through here just very quickly, and that was, can you speak to the best practices of communication through finance functions globally, considering the cultural, linguistic, and additional barriers associated with that?
Well, I'll jump in on that one first, and for a global organization, and talking about a multinational company, it's important that you really overemphasize communication, because people have a tendency to feel like they're isolated in some of the more remote locations. Maybe they haven't seen an officer of the company in their location in a while, so you really have to overemphasize communication, and that can be through email updates that go out to the entire organization. Maybe it's just status updates on particular projects. The town halls and technology like this with WebExes and conference calls, I've used all of these to try to help open up the communication side, and then make sure that you do what I call an active Q&A. There's always some hesitancy with the Q&As for people to open up with questions, so I've tried different things with having people submit questions in advance and submit questions anonymously, and all different kind of things to try to open up the dialogue as much as possible, because you really have to overemphasize it. Otherwise, you're just not communicating with everyone.
Fantastic, and thanks so much for that advice. Just for the sake of time, we're going to go ahead and wrap up today's presentation. Want to thank again John Briscoe, Jim Parent, and Tony Santiago for the fantastic information that was conveyed today. We look forward to seeing all of you on the upcoming webinar on October 21st, and keep your eyes peeled in your inbox for the follow-up information, and any additional questions can be posed to Tony Santiago at tony@taxsearchinc.com. So thank you all for joining us today, and have a fantastic rest of your week.